Hey guys, this is Gunnar with Realty Growth Incorporated, and we're back with another episode of the Real Growth Podcast. And today I have an awesome guest who's a friend of mine. It's Adam Hartman from Home Federal Bank here in Rochester, and we're going to get into how he got into the business and the different some other different things like the state of the market and whatnot. And I think it'll be a good one. So thanks for joining in. All right, Adam. Well, here we are, man. This has been a long time coming. We had a few reschedules, and we both got kids, so we got life going on. But I'm glad that we can finally sit here and do this.
Absolutely.
Yeah, awesome. So why don't you begin by just kind of introducing yourself for people and, background where you're from and then how you got into the business, the banking business. And,
Sure. So my name's Adam Hartman. I'm a commercial lender at Home Federal. I grew up in Willmar, Minnesota, so west central Minnesota. Went to college at St. Thomas, Roll Toms.
Yeah.
And then right out of college, got into banking at a community bank up in the cities, which was a de novo, which means a new bank in 2004, and I joined in 2008. So that was really, really good for me because I got to know banking from the ground up. I was the 13th employee of the bank, and
Very cool.
I had a really good experience there. And then I moved to Rochester in 2013 and moved to Home Federal in 2022, and it's been really good. Banking fits me pretty well. So.
Yeah, awesome. You choosing that for a career, is it something that you always knew you wanted to be in that world, or did you have any experiences early on that made you think, hey, this is something I want to stick with?
Yeah, I'd say growing up in a small town, I was always good with numbers. Math was my best subject, and so I knew I wanted to work with numbers, but I liked people too. I liked being out and about, and so being an accountant or an auditor didn't appeal to me as much because I didn't want to be stuck at a desk. I wanted to be out and about, and
Sure.
Banking was a job that fit both those. I could work with numbers, and I could work with people, and so I gravitated towards that. And as I mentioned, right out of college, I got a job at that. I went to college for financial management, so it's been something that I've always thought I'd be doing, and now that I'm in it, it was the right call because I truly enjoy going to work each day. So.
Yeah, that's very cool. And so as far as Rochester, kind of talk about what specifically brought you to this community as opposed to others, and I guess are you you've stayed here and you've got kids and everything, so you must enjoy the town. But why Rochester?
Sure. Well, I met my wife down in Rochester, and so that's what brought me down here. But I've been in Rochester for many years. My dad's side of the family's from West Concord, and so I have aunts and uncles in Casson and Yoda, and in the summers in high school I used to come down and sell corn. So those corn trucks you see on the corners.
Yeah, that
was me. That was my high school job, and so I've been spending summers in Rochester for years. And then after I met my wife, she was from here, so I moved down, and it's a natural fit with my familiarity with it and having family around.
And on the topic of being in Rochester and banking, you said you're in commercial lending with Home Federal.
Correct. Yep.
So for kind of people that don't know, or even maybe people that are a little bit understanding, kind of talk about, maybe on a day-to-day or week-to-week level, what is it at bare bones that you do as a commercial lender?
Sure. It's business banking. So it's when a business needs a loan, they come to me, and I help them with the loan. I help them structure it to fit their needs, when they're going to need the cash, when they're going to be able to repay it. A loan is really an investment in your company, and so they work with me to figure that out and what investment works best for them.
Sure.
So.
And as far as qualifying businesses and lending, a lot of people out here are familiar with like a residential loan.
Sure.
You want to buy a house, they look through your credit and kind of your credit history, not just your credit score, but income and debts and all those sort of things. What's similar and different between a person, applying for a mortgage for a residential loan versus on the business side? Are there similarities and differences between those two? And
there are similarities and differences. Yeah,
sure.
Similarities would be we both look at your financials. So your ability to repay, your credit score, your character, that type of thing. With residential, it's more immediate, so it's your last two pay stubs. With commercial, it's 3 years of tax return, so it's the last 3 years of the business. And what we're doing there is just trying to analyze cash flow and making sure you have the ability to repay. On the commercial side, there's usually a longer track record of that, so that's why we ask for the 3 years of tax returns.
Sure.
On the consumer side, the residential, they're more focused on what's going on right now.
Sure.
And so there's that. We have them fill out a personal financial statement, which is just a personal balance sheet. So it's all your assets and your liabilities, what you own, what you owe, and then it gets to a net worth. And that we do that to understand your ability to repay. If the business can't repay, do you have the personal capacity to do it? So.
Sure. Okay. So on the business side, there's also the personal aspect is involved. You're looking at the individuals.
Absolutely. Yep. Anytime a business, we do a loan to a business, we have the person that owns the business or the key management guarantee that as well.
Okay.
So if the business can't repay, they will.
Sure. So. Okay. So that was going to be my next question then. So somebody like newer businesses who are, have an idea or maybe don't have a long established, you said like 3 years of business tax information. Maybe they're starting off new.
Yeah.
Are those people still able to get loans? And if so, is that basically come down to looking at their, personal financial statement or their personal ability to pay the loan if the business fails? Is that kind of what you're saying?
When they don't have that track record, the personal ability plays a bigger role because that's what we have to go off of.
Yeah.
We also can do loan on projections, but those have to be well thought out. And we have a lot of great resources in Rochester for new businesses, from Collider to SBDC.
Yeah.
I work on the SBA side, which a lot of new businesses will go the SBA route because they're higher risk. And so we work with SBDC quite a bit, where they're able to put together a business plan and detailed projections, well thought out. And that's, as a banker, that gives us lots of confidence that they've thought through what can happen, what their true income and expenses are going to be.
Yeah.
And we can get comfort in knowing this is more real numbers than pie in the sky.
Yeah.
So that helps us, and I think that helps them too, because no one wants to get into a loan they can't repay.
Kind of further on that topic, as far as business financing, what are some, and maybe the answer is anything, and this is what I don't know, but as far as loans that people are seeking, you think of, obviously you'd get a loan to purchase real estate, whether it's commercial or residential real estate.
Yeah.
But do you also do like for business financing for things outside of real estate, as far as maybe like equipment or other things like that? Is that pretty typical?
Very typical. Yep.
Yeah.
Yep.
Okay.
Equipment financing is kind of the other side of, if you're not buying real estate, you're buying equipment.
Yeah. Yeah.
I do a lot of dental practices too, so sometimes it's just buying the existing business, and that's patient records and a patient base and essentially an income stream.
Yeah.
And so there are many different types of commercial loans, from real estate to equipment to patient records and that.
Sure.
type of
Sure.
thing. So,
Yeah. So that's a cool thing to kind of talk about, because I think, I work with a lot of first time businesses who are, they're they have an idea, and, you talk about the pie in the sky. Some ideas are unrealistic. Some are realistic. Some people have the wherewithal and the drive to make it happen. But a lot of the roadblocks for people is, hey, I've got, a monthly budget, I can afford this much rent, or I can afford this start of property, but how am I going to buy all this equipment? And I think it's good to hear that, just because you don't have the tens of thousands or hundred thousands of dollars laying around to buy equipment, it's still possible to get that equipment. And it sounds like that's not even uncommon at all. I mean,
No,
it shouldn't deter a new business owner to say, hey, I don't have all this money laying around to buy this equipment outright. That's where someone like Adam comes in.
That's very typical. That's why I have a job.
Yeah, right.
So, and there's a lot of programs for that too. A bank, if someone's buying equipment, we'll want to finance that over the life of the equipment. So we never want the loan to be more than what the equipment's worth.
Sure. Yep.
If that doesn't work for their cash flow, yes, we can use the SBA, where we can do it for longer terms, so they can lower their payment, make it more affordable for them.
Yeah.
And we maybe get upside down where the loan's worth more than the equipment, but we have that SBA backing.
Sure.
So,
okay. Right.
So
right.
there are different tools in the tool bag there to make things happen for new businesses.
Yeah, that's very cool. So talk about that for a second with SBA backing. Maybe just for people that don't know, when you hear SBA loans, what is that? The Small Business Association?
Small Business Administration.
Administration.
Yep.
Okay.
Yep.
So kind of talk about what that is, and you talk about how you get SBA backing. What is SBA, and why might it be an appealing program for business owners?
SBA is a government-backed program for small businesses, and the backing is that they guarantee part of the loan, depending on the loan size, but they guarantee the loss. So if there's ever a loss, they take 75% or 85% of it, depending on the size of the loan. And so that mitigates the bank's risk.
Sure.
So it
encourages you to
take risks that we otherwise wouldn't.
Sure. So, yeah,
that can be in cash flow, that can be in collateral, that can be in a number of different things. But if it's kind of a fringe loan, where one that we just can't do, it's a great SBA loan, because that gives us the support where, okay, now we can with that mitigating our risk.
Let's say there's businesses that come and are looking for loans, and maybe they don't have, the picture isn't quite well enough painted for you to agree or not agree, but, determine that there's someone that's loan worthy. For people like that, is that something where you're able to give advice on, hey, look, we want this to work out, but you're going to, maybe give them I don't want to say a checklist, or maybe a checklist or laundry list of, hey, this isn't completely over, but in the current state, it doesn't work out. Kind of here's what we need to see moving forward. Is that something that you're able to tell people? And do you ever have people take that advice and, come back and make it happen?
All the time.
Sure.
That's pretty common. And that's the thing too. I want to be a resource for these people. I don't want to just be only when you need a loan.
Yeah.
So, when they're looking at starting a business or buying a piece of equipment, I want to be in those conversations and lay out the positives and negatives, and and so if their cash flow isn't quite there yet, I tell them that, and I say, here's what we need, here's a way to get there, possibly, or the collateral, if we need more collateral, here's some options. We may need a cosigner, and explain the benefit of that, and you bring in a cosigner, you're bringing in their income and their expenses, so they have to be financially strong. And so
I think that's really cool, and I wanted to hit on that point more, because I think, like I said, when I have the small business owner in mind, a lot of times the first time business owner, and one of the biggest hurdles for these people is they can, they just have never done it, so there's so many fears and so many question marks as far as, I guess when you're not in that, or maybe you're starting out, you feel like everyone else really has everything together and they're so far ahead of you that how could I ever get into the game? And I think what this is encouraging as I listen to you is, hey, if that's you out there and you have an idea to start a business, there's no harm in sitting down with Adam or somebody like Adam and getting the advice, even if it's not time, maybe you don't have everything in order to do something right now. There's people out in this community that want to help you and make it happen, and it sounds like there's plenty of examples of that. So I think that's super cool.
Absolutely, yeah.
So that, I guess, brings me to my next point then, which is, obviously you've mentioned a few times you're passionate about helping people out and working with people, and it seems like the gratification you get out of the job is more than just the numbers side and everything like that. And I know that you're also involved in some other things outside of banking in the community. So talk a little bit about what it means, I guess, to help people out and to be a community member and that sort of thing, and what makes you feel good about what you're doing.
Sure. Being a community banker is important to me. So, and that community is important.
Yeah.
Because it's giving back to the community. We're here. We're your neighbors. We're in the same organizations as you are, and we thrive when the community thrives.
Yeah.
You see a lot of banks coming to town. That's because this community is thriving.
Yeah.
Everyone wants to be part of it, and that's Rochester is a fantastic community. And for me to give back to that through different organizations or these loan programs that obviously benefit me as a banker, but obviously benefit the community if a new restaurant comes to town or a new business, and the business owners themselves. That's a really cool day at closing when I can give them that loan and their dreams can come true. Because for me, the loan started a month ago. For them, the dream started years ago.
Yeah,
where they've been building towards this, and this is the culmination of that. And seeing it in action. So that's the favorite part of my job is those days where the business actually gets started and I had a part in it.
Yeah, so. I agree. I think that's awesome. Yep, seeing someone start from having an idea or a dream and having the work ethic and then actually making it happen, that's super gratifying. All right, well, super cool. Well, I think the next sort of thing I want to talk about then is maybe some specifics about the current state of the market and lending and interest rates. Everyone's paying attention to interest rates. Even people that aren't super involved in business, interest rates. Obviously people look at the 30-year residential, and so I guess from that standpoint, what is the market like right now? Where are interest rates sitting, and how does maybe some of these commercial programs for equipment or SBA loans or things, how do interest rates with something like that compare to, say, a 30-year residential mortgage?
Sure. Right now, commercial rates are a little bit higher. The 30-year residential mortgage is about 6.5%,
Okay.
and commercial rates are in the 7s or 8s, depending on a variety of factors. Their cash flow, collateral, that type of thing.
Yeah.
So they're right now the residential rates are a little bit lower, and that has a few factors into it. The residential rates, most mortgages get sold to Fannie and Freddie, which is a government entity, so that
Sure.
The purchases of those kind of dictate where the rates are. Where on the commercial side, those loans are held at the bank themselves, and so that depends more on the bank's balance sheet as to what the cost of our money is versus what the loan rates are. So,
Yeah, sure. Okay. So commercial rates are a little bit higher. I guess this is maybe a simpleman's question here, but I guess look at just the real estate example first between, commercial and a residential. Number one, is it typical for a commercial loan to be, obviously 30-year fixed? There's other ways to do it with residential, but that's kind of the standard out there.
Yep.
Is that the same standard in the commercial world, or is there a different, is there a different term with them, or what's most common as far as, like, let's say I'm a business owner and I'm looking to purchase a building. What's the most common, terms that I would get if I'm looking for that sort of loan?
Sure. One of the biggest differences is that with a mortgage, a 30-year mortgage, that loan's fixed for 30 years.
Mm-hmm.
Your rate's the same for 30 years. Your payments, your principal and interest payments, the same for 30 years.
Yep.
With commercial, most of the time we only go out 5 years until the rate resets. So some loans mature in 5 years, some reprice after 5 years or 7 years. But the reason for that is that as banks, we take on interest rate risk. And the longer you go out, the more risk you take on.
Yeah.
So, for example, loans that were at 4% 2 years ago would be losing the bank money now. And so we don't want to have that for 30 years.
Sure. Okay. So either they'll mature, and mature meaning everything's due. Maybe there's a balloon
payment. Yep. That's what the balloon payment means, is that it matures and all the principal and interest is due at one time. Or they can reprice. There can be at the end of 5 years, it's going to reprice to a variable rate, a Wall Street Journal Prime or LIBOR, or whatever.
Okay. So if somebody wanted to stretch out the loan, or rather than, like you just mentioned, the banks to take on something at 4%, now it's 6.5% or higher with commercial, rather than the bank eat that for the next 20 years. They could continue the loan for longer than 5, but now your interest rate is going to be closer to
reset
7,
to a market
8%.
rate. Yeah.
Sure.
Yep.
That makes sense.
Yep.
Okay, so that's more common in the commercial world.
Yes.
Okay.
Yep.
Because I know with people, and I have friends and other people that have done different types of loans for residential. But again, I would say, would you agree that when you think residential, the common loan is a 30-year fix? Is that more standard? Or maybe I'm wrong. Maybe is it more common to, maybe I'm just not aware, but maybe is it more common to do other kinds of loans, or am I thinking of that right? 30-year conventional?
No, 30 years,
30-year fix.
The majority of loans. So, there's also, the 15-year product, 20-year product, but the shorter the amortization, the 15-year, the more your payment. And, with where real estate prices are now, a lot of people can't afford a higher payment. The prices and rates are high enough where they're kind of maxed at the 30 years. So
Okay. So very good point on that same point. Now and again, I'll stick with mostly commercial because I know that's where you're in now. So you talked a little bit about the numbers of it. As far as real world out there right now, volume, what are you seeing in terms of, I guess compared to how it's been maybe over the last several years? What kind of volume are you looking at? Is there a lot of business going on? Is it up? Is it down? kind of talk about that a little bit.
Yeah. Those are all relative terms. So,
Sure.
2022 was a great year because rates were low and there was a feeling on the market that rates were going to go up. So, a lot of people that were sitting on the fence jumped in 2022 to capture those lower rates. Rates did go up in 23 and they went up drastically.
Yeah.
Quickly. So, 23 was down for most banks, including Home Federal.
Yeah.
In just that there wasn't as much confidence in the market as to where rates were going.
Yeah.
And there wasn't any stability because every 6 weeks the rates would go up. And so people didn't want to take out a loan if they didn't know what the rate was going to be.
Yeah, sure.
So
okay. So down compared to the ridiculously
the
low
boom.
rates
Yep.
of a few years ago.
And I guess to wrap that up, and this year we're seeing more stability in the market. Rates have stayed steady. The Fed has kept rates steady, and there's a lot more confidence in the market because of that. They kind of know what they're getting into.
Yeah.
And so we're seeing more activity, not to the level of 2022, but more activity, and it is starting to come back a little bit.
Sure.
So.
Okay. Yeah. So what would you? And we've talked about this, off camera, but obviously, again, coming off of years where rates are in the twos, maybe twos or threes for commercial. I'm a numbers guy as well, and I like to look at the long curve on these sort of things. And 2-3% is about as low as I think maybe they've ever been.
Yeah.
So that being said, what would be what would be your message to people out there that are nervous about rates are 6.5, 7, and I think I have a lot of conversation with people that are maybe hopeful that rates are going to dip back down, back to 3, and nobody can tell the future, so put that out there right now, right? This isn't, I'm not putting you on the spot, but what is your feeling as someone in the industry about 6.5, 7.5% interest rates on the long curve, and is that something where should people really be expecting rates to dip back down to 3-4%, or is this kind of a more normal number on the long scale?
This is a more normal number on the long scale. If you look at the historical rates, this is more normal, and it's even on the low side.
Yeah.
On the historical perspective.
Yeah.
I don't think rates will ever get down to the 3 and 4s again. There's just that was a weird time.
Yeah.
And I'm glad the people that took advantage of it did, because good for them. But I wouldn't hold your breath waiting for that, because the market's going to pass you by.
Yeah.
As prices increase, you're going to lose any advantage you have of waiting for a lower rate. Your payment's going to be higher just based on the value of what you're buying.
Well, and then if that being said, then so people that are, and again, not to not bash anyone's ideas out there whatsoever, but I think people that maybe are hoping to have rates dip right now, hearing from a professional here, look, rates 6.5, 7%, that on the long term is still considered relatively low. I think that's just something to keep in mind as people are out there, like you said, shopping around or maybe looking to make an investment, because you don't know. I mean, rates could go up to 10%, and that's still not crazy. That's on the long curve. That's still not crazy high. Well, when rates are 10%, you're going to be you're really wishing you got a loan at 6.5 or 7%.
Right.
So I would agree on the real estate side. That I think the same thing is being felt is. I think there was a big, people were taken aback when rates jumped up from 3 to 6, and there's a lot, some hesitancy, but I think there's a lot of people now that are coming around to, okay, look, I think this is still a reasonable rate, and hey, I can't, how long if you're just going to wait out there for them to go down to 3%, you might be waiting forever.
Yeah.
Right.
Yeah.
So
that's tricky because, from 2008 to 2022, there was no rate movement. The rates were that low, and so that's a long period of time, and that does create a normal.
Yeah.
For guys our age, that's what we grew up in. From the time I started banking, rates were in a low rate environment.
Yeah.
And so to look at historical, you can look at it, but you don't live it. And now we're starting to live it and adjusting to it.
Yeah.
So there is an adjustment period, and I think 2023 is case in point for that. And then, no one likes taking on new debt.
Yeah.
No one does. So interest rate matters. It certainly does.
Yeah.
But as I mentioned before, I like to look at loans as an investment in your business.
Yeah.
So if you're buying a piece of equipment and you're financing at 7%, are you going to is it going to create 7% for you? Are you going to be able to make
Yeah.
at least 7% on this piece of equipment for your business? And
Yeah.
in most cases it's yes, but that's something you should look at on the front end is this worth buying at that rate? And
Yeah.
if it is, then sure, you're taking out a loan, but you're increasing your profitability, which is the name of the game.
Yeah, right. No, that's very well said, I think. Yep. So you mentioned 2008 to 2022, the rates have been relatively, low on the long term. So a lot of people used to that. On the topic of 2008, I know we were chatting a little bit beforehand. You had an experience. One of your first experiences, it sounds like, in banking was, that's about the time that you got into the business. So kind of talk a little bit about that. Maybe share a story or two if you have any from that time. And, because obviously, like me, in 2008, geez, how old was I in 2008? I was, 11, 12. So that being said, what was that time like, and do you have any kind of experiences in the banking world from that time? Because for a lot of especially us younger guys, we remember looking at my parents and watching the news, and there was a general sense of stress, but we weren't living it in the real world. As somebody that was entering their career at that time, kind of talk about that a little bit. I think people would be curious to hear about that.
Sure. It was quite the time to break into banking, for sure.
Yeah.
So I graduated college in 2008 and started working at a community bank right after that. And, things were going on.
Yeah.
The collapse was happening. And so from the rate perspective, it was the opposite of the shock and awe of going down to up. It was going up to down, and rates were just crashing. And from a bank perspective, that was causing havoc on our end as to how do we reprice our loans. Yeah. Which are at fixed rates. It was causing havoc for the bank. Anytime there's rate volatility, it messes with the bank. On a global perspective, it was there was a lot of risk in just the assets, the underlying assets, the mortgages, the investments, all that, and things are kind of collapsing around you. So that's really got back to fundamentals, and I think adjustable rate mortgages kind of came to a head there, and kind of these creative products. Where not a lot of people actually understood them. Really came to a head, and so the bank I was at was a small community bank, so we didn't have a lot of those. We steered clear of the dangers.
Sure.
But just the market as a whole, things were on fire around us. So
Yeah, right. Crazy time.
It was a crazy time. So
yeah.
And right before I got into banking, there was the summer before I was an intern, and I interned for the Department of Commerce. And I was an intern. I didn't really know anything.
Yeah.
But one of the things they had me do was there was a development out in New Prague that had hundreds of homes that were vacant and newly built homes. And so I go, why don't you check this out?
Yeah.
So I went and I checked it out, and sure enough, it was whole developments of $300,000-$400,000 homes at that time. They're probably $500,000-$600,000 homes now that were just sitting vacant. And so we looked into it, and it snowballed into the biggest mortgage fraud in Minnesota's history.
No kidding.
So when I came across it, almost by accident, send the intern to check it out, and
wow,
turns into that. So
no kidding.
Yeah.
Well, I mean, in as much as that's what a scary deal and everything like that, that's had to have been kind of a. Would you say that was a? Well, would you say that was a cool experience? I mean, or is that something that, or how would you describe that experience? And is that something that obviously it sticks with you? Was it kind of cool to be, hot into the game, discovering something so wild like that?
Yeah, it was. And it was, sometimes those jobs can get kind of boring. That was not boring.
Yeah, I'm sure it wasn't.
That was federal indictments, and I was working hand in hand with FBI agents. And
wow, no kidding.
So
it had to have been kind of cool.
Oh, it was cool, yeah.
Yeah.
And at the same time, just knowing I'm way over my head, there's no way my name should be attached to this, or that, I should be in this room right now, but here I am.
Yeah.
I'm not going to exit, so.
That's crazy. Well, what a cool way to start. All right, awesome. Well, okay, so talked a little bit about your background, Adam, and current state of the market. I guess the last thing and kind of the closing thing I would want to talk about then is, as we look forward to the future, and again, this is something where, we don't know the future. We don't have a crystal ball.
Yeah.
Right. But is there anything that you'd want to say to people or anything that people should be excited or nervous about as we head into the next, obviously things are changing in the market and there's, maybe getting to be some more comfort now as we head into 2024 from the rates increasing. What would you tell people as we look forward to the future, and what are talks in your world about what where people's heads are at as far as where things might be heading in the lending world?
Sure. I would expect rates to stay about where they're at. So, to touch back on that conversation of waiting on rates to drop, I would advise against that. I think if you have a project that works, whether it's you're buying a home or buying a piece of equipment, I would move forward with it if it makes sense. Rochester's a bubble. It really is. So it's you see a lot of the macro numbers and we're not on either of the coasts where there's a lot more volatility.
Yep.
And then combined with Mayo's reinvestment in the community, there's jobs here. There's good jobs here. It's and there's good opportunities.
Yep.
And so in the Rochester area, I wouldn't be cautious at all. Relatively, I mean, you obviously have to take some caution.
Extra cause, yeah.
Right.
If you get an idea, I think you said that very well. If you've got a project that you think could work, hey, you know what? I think it's a good time to do it, right? No reason to wait. If you've got it, if you've done the work to figure out a project that might work,
Yep. Any loan gets paid back with future cash flow, and that's we can somewhat see the future for Rochester, and it's skyscrapers going up downtown and doubling the population or so. And so what a great time to invest in this community, whether that's through a building, through equipment, through starting a new business. I think it's a golden opportunity. I think that's why you see so many businesses coming to Rochester, is they see it too.
Yeah.
There's a lot of opportunities here and a bright future.
Sure. Yeah. That's awesome. Well, good. Bright future. That's exactly what we want. That's exactly what we want to hear. Right. Awesome, Adam. Well, this has been a pleasure. As we close here, how, if someone's looking to get a loan, how could they get a hold of you?
Sure. Email or phone. So email is adam.hartman@hfsb, Home Federal Savings Bank.com, or give me a call. Number's 507-280-3439. I'd love to hear from you.
Awesome. Yeah. Fantastic guy. Adam, when I got into the real estate business, 5 years ago now, he's one of the first people to reach out to me and has always been a good friend of mine and somebody that I rely on to let me know what's happening on his end of things. So it's been a pleasure to sit down with you, Adam. And please do reach out to him, because he's somebody that's, again, it's not just numbers. This is a guy that's here to help and here to help you make a plan and make your dreams come true. Right, Adam?
Absolutely. I want to help you, not just get a loan. I want to be part of your business team. So
yeah, fantastic. Awesome. Well, thanks for tuning in, everyone, and have a great rest of your day.